Hi, welcome to the Market Alert for Wednesday, the 1st of February. So it's D-Day today. It's Fed FOMC, where the rates are going to be increased by 1/4%, 0.5%, or 3/4. We'll just have to wait and see. But the market's fixated on 1/4%. But yesterday, US stocks gained at month end after softer employment cost data, while focus shifts to the FOMC. And this is an interesting headline. The bears are launching a counterattack. Will it work? Time to hedge the downside. So again, you just have to wait and see how this is going to play out. And this headline here, Fed preview, 1/4 basis point tomorrow, and then the end is very much in sight. Now this is a premium article on Zero Hedge. So it doesn't give all of the details. You have to subscribe to this. But I thought that's interesting. What matters to stocks is, one, will this be the final rate hike? And two, how long will the Fed keep rates here before they start to cut? I'm sure they're going to cut at some point. They always will if they can, just to keep things going. But it's the 25 basis point really that's the key here, because if it's only 25 basis points tonight, the market will rally, I would have thought. But then you could also counter that argument by saying, well, it's not enough and the market won't like it because there is still a lot of inflation around. But it only needs a slight tick down in the CPI numbers for the market to move lower. And let's face it, there's a complete disconnect between the reality of the economic data and the stock market. So what they'll do is just use these and say, oh, well, there's only 25 basis points. The Fed must think, inflation is going to drop now, so we can move the market higher. Anything that allows them to move the market higher, they're going to use to their advantage. So just keep that in mind. So what we've got CPI for the Eurozone, that's the flash estimate, and also OPEC meeting all day. Then we've got the ADP, which will be an interesting one. That's a precursor to the non-farm payrolls on Friday. 3 p.m. manufacturing, we've got the JOLTS at 3 p.m. as well. And then the big one for the day, the FOMC and the press conference at 7:30. There you can see they're factoring only in 1/4 basis point. So if it comes out at half, then likely we could see the market move lower initially before it then moves higher, because they say, well, actually, the Fed are on target to do what they want to do. Like I say, any excuse to move the market higher. So there we go. That's your news for today. And let's see how it plays out by 7:30 p.m. this evening. Okay, let's move on and have a look at the Dow Jones. So in the Dow, the market moved lower in the morning, then turned around and never stopped moving to the upside, which can be seen there, back up towards the 78% retracement. In the 30-minute chart, there's your move down in the morning. European markets dragging the market down, but from the start, the market traded sideways for an hour and a half, couple of hours, and then off that low. Again, you see why it's important to have the previous day's low and know where it is and high. The market then just moved higher, and all we had was one red bar before the market then put in a massive bar before the close. They're just trying to hold this market up just in case the bears do come into the market. Then at least they've got some ground to give up tonight if that is the case. I haven't done the implied volatility. Well, I'm not showing the implied volatility. It's no different than yesterday. So let's move on to the German DAX. DAX remains in a sideways range. Will it break to the upside or to the downside? Only time will tell, but certainly range bound there at the moment. But another recovery yesterday for the DAX, straight off the 20-bar moving average in the daily chart there. And you can see overnight the market is at the top end of the range and is currently sideways there. In the 30-minute chart yesterday, say we had the European move to the downside, which we've had for the last 7 or 8 days. Then the market found its feet and we came all the way back. And again, look, down by the low of the previous day. In a bull market or an up move, then you want to be looking out for those lows, because if the market gets down to these levels, they're likely to move the market back. And it moved all the way back. We had just the one bar there in red closing below the 5-bar moving average, and then the one on the electronic at night before we had the move to the upside, the same as the Dow. So market being moved to the upside there. The high is not far away. Close is only just above the current trading range, and we've got the 50 and the 200 MA there as support along with the DP. So any down move could be picked up quite easily off here and move back towards the high. However, that said, the market this is a key one for this month, so we could see the market trading sideways and being fairly quiet, certainly in the afternoon. Yesterday in the 5-minute chart, you see the market there moving to the downside, and then that market being picked up, as I say, midday at the low. There's your low, and then reversed, and then just moving to the upside all the way through for the remainder of the session. And numbers, these are mainly from last week and Monday. Total net profit 56366, profit factor 5.19, win-loss ratio, more losers than winners, but that we're still profitable because I keep those losers very, very small, get rid of them, and then let the profits run on the trades that go in my favour. In the S&P, similar to the Dow, down in the morning, overnight session for the New York markets and Chicago markets, and then back up in the day and down on the overnight. There you go again, you can see all the way up, and just that one red bar closing below the 5-bar moving average in the 30-minute chart. And again, I don't know what happened here. You can't even say it's the shorts getting out. That's what you would normally get, which bring the market up. But the market pumped up on the S&P as well, and sideways now overnight, not far from yesterday's high either for the S&P there. In the FTSE, stuck in the sideways range like the DAX, but the last 2 days the market showed a bit of strength, closing back above the 5-bar moving average there. 30-minute chart saw the selling yesterday morning, and then again, watch this, off the low and straight back up following the Dow there. In the currencies, hopefully this will have the opportunity to break out after this evening, but still stuck in that sideways range for the GBP JPY. There you can see a bit of a move down yesterday, then a bounce back, then back down again, and then back up. So a bit stuck in a range even in the smaller time frames there. In the pound, also sideways. It's got that high there of 124.459. At the moment it's the lower end of the channel, looking for some support. It depends what the dollar does tonight, whether the pound will move higher or not. In the 30-minute chart, a bit choppy yesterday, as can be seen here. We moved lower, then traded sideways, and then went down to the S2, having taken out the low convincingly yesterday morning, and then becoming a resistance here and then down. So we've got a new low to look at today. We've got the close where there's been some support overnight as well, and we're just trading above the DP there and the 50 EMA with the high, the R1, and obviously the BRNs and targets in between, and the 200 MA. But again, this market's going to wait to see what the dollar's reaction is to the Fed's decision on rates later this evening. And in the metals, we've got the market sideways still with silver. They keep bringing it back, but they won't let it go above 24 per ounce. You can see the fight back there yesterday as the market was pressured in the earlier part of the electronic session. And their strong move to the upside, and currently sitting at the close, needs to take out yesterday's high. But that $24 per ounce level up here is the one that's causing this market problems. Every time it gets anywhere near or through it, it's immediately slammed back down. So something's going on there. Same in gold, down heavily yesterday in the morning, but then brought back, and you'll see this very strong move. So a big sell-off in gold yesterday morning, but there was no way that was being allowed, and the market roaring back. And again, like silver, at the previous day's close, and the high within range of being taken out there. Just a quick look at the dollar, see how this is faring overnight. So in the dollar index, down yesterday after being up initially, and a bit of weakness overnight as well. So let's have a look at that in a bit more detail in the 30-minute chart. Let's just see what's going on here. So we were up on Monday, and we attempted to move higher yesterday morning, but then things changed, and we've seen the market now stuck in a bit of a range, but predominantly moving to the downside there. So a bit of weakness there as the market waits for the Fed later this evening. Okay, that's a quick roundup of the markets ahead of the FOMC. We'll have to wait and see what happens later on. Market could be quiet. Bit of activity first thing this morning, bring the market back up to the highs. But yeah, we'll just have to, I think I say, it's going to tread water, isn't it, and wait and see what the Fed's going to do, particularly this afternoon after the ADP numbers. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.